Hello guys. Hello students. I hope you are fine and good health. This is your teacher Haris Bhatt and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from the paper May-June 2024 variant 22, the recent paper which is not yet disclosed, which is not yet declared by the Cambridge, yet to be declared in August. So May-June 2024 variant 22 variant 22 question 4 we are going to solve. First question has come from incomplete records. I have already done that. Second question from errors. I have already done that. Third question from ratios. I have given you the solution. And fourth question is from marginal costing, that is from cost volume profit analysis or CVP analysis. So let's see. D Limited is a manufacturing company. Explain two uses of absorption costing. So it's quite easy that if you want to go or you want to write the uses of absorption costing, let me write it for you. One is this, that it is used to find the selling price. So it is an approved method of finding the selling price of the product because it includes total cost into its calculation, including fixed cost. Including fixed costs is included in its calculation. So it's a proper method of finding selling price. Second thing is this, that it is used for inventory valuation also. It is an acceptable method according to standard for inventory valuation, right? As we used to add fixed production cost in absorption costing to find the per unit cost, and then it will be multiplied with the closing units or inventory units to find the inventory valuation. So it is also used for inventory valuation and acceptable under IAS. So this method of finding the total cost is also acceptable under International Accounting Standard, and it is also acceptable for tax purposes. So for tax purposes, if you are using absorption costing, it will be acceptable for tax purposes, means tax authorities will accept your financial statements, right, to evaluate your tax situation. Let's move forward. D Limited uses marginal costing. At one of the factories, a single type of product is made. The following budgeted information is available. Selling price 92, direct material 33, direct labor 39, fixed cost 8. So you can easily analyze that if you want to find the contribution, the contribution is going to be selling price. Sometimes because I used to type the answers, so sometimes it happens that I used to go for wrong spellings because I am typing it actually. So it doesn't bother you at all, should not bother you because of the reason that we are studying accounting. So selling price is going to be 92 minus variable cost is direct material 33 and minus direct labor also 39. So the contribution which we are going to get is going to be 20. So 20 is going to be the contribution. Next thing which we want to calculate is going to be the fixed cost, because the B part requires us to find monthly break-even point. And break-even point, I'm using abbreviation, but you should not use abbreviation, is equal to fixed cost, total fixed cost divided by contribution per unit. So break-even point is equal to total fixed cost divided by contribution per unit. So how you are going to find it? Contribution per unit we have already calculated, that is selling price minus variable cost 20. Fixed cost, total fixed cost we have to calculate. Fixed cost per unit is 8 and the budgeted capacity of 15,000 units per month. Remember this, that it doesn't ask us that the actual production is 15,000 units. It is the budgeted production. So whatever be the total fixed cost according to the budgeted capacity will be our total fixed cost, right? And you know that the total fixed cost will not change. So 15,000 into 8, you will find your total fixed cost, which will not change for any other capacity. It will remain the same unless the question mention us that the fixed cost is respect to change. So break-even point, we will calculate because total fixed cost will be fixed in total at a budgeted capacity of 15,000 units. So because fixed cost per unit 8 is given, 15,000 into 8, you will get the total fixed cost 1,20,000. Now 1,20,000 divided by contribution per unit, that is 20. So 6,000 units is going to be your break-even point. So break-even point is going to be 6,000 units. I hope so that you have understood this point. It's not a difficult thing to understand. So to explain the two uses of absorption costing, I have done that. That is 4 marks. And then we have been asked to calculate the break-even point. The formula is fixed cost divided by contribution per unit. We have found first contribution per unit, selling price minus variable cost. And then we have gone for the formula that break-even point is equal to total fixed cost divided by contribution per unit. Let me write over here so you may not confuse this. Total fixed cost divided by contribution per unit. 15,000 units is the budgeted capacity into 8. Total fixed cost is 1,20,000 divided by 20 is the contribution per unit. So 6,000 units is the break-even point. Capacity is 15,000. So if we are able to produce 15,000 units, it means that you have enough margin of safety, which is going to be 9,000. But here we didn't, the question examiner didn't ask us to find margin of safety. So A and B part we have done with that. So let's move on to the next part, that what is the requirement in the next part, keeping in mind that the fixed cost is 1,20,000. So let me go for the next calculation. Then we can rub it again. That's not a big deal. So the next part is going to be, so let me make it a little bigger. So the next part, let's see. So it was forecast that only 4,920 units would be sold in January 2024. Calculate the forecast profit or loss for January. So we are basically producing or selling only 4,920 units. I can understand that the break-even point is 6,000 units, right? And the budgeted capacity is 15,000 units. But the examiner is basically asking us to find profit or loss at a production capacity or selling capacity of selling units of 4,920 units. It means that it is understood that we are going to have a loss. Why, sir? Because the break-even point is 6,000 units. It means break-even point means that no profit, no loss situation. So if we are selling less than 6,000 units, our profit is going to be 6,000. At 6,000 units, our profit is 0. So if we are producing less than 6,000 units, it means that that we are going to have sustain a loss. So total contribution is going to be 4,920 units multiplied by 20. We don't need to go for a proper marginal cost income statement because that he is asking us only to find the profit or loss. 4,920 multiplied by 20, we will get 98,400 is the total contribution less fixed cost, which will remain the same. Remember this, that fixed cost will remain the same. It means that fixed cost will be 1,20,000 because at any capacity, total fixed cost will not change. Total fixed cost will not change. Fixed cost is a cost which does not change with the change in the volume of production. So if the production is increased to 6,000 or to 15,000, or it is decreased to 4,920, fixed cost, total fixed cost will remain the same. 98,400 minus 1,20,000, 21,600 is going to be the loss for the year. Why? Because rent of the building will remain the same. Either you are producing 10,000 units in that or 20,000 at a certain level of, at a certain range, it will remain fixed. At a certain level of output, it will remain fixed. And after a certain relevant range, it may increase. And if after a certain range, it will increase again and again after a certain output, we used to call it as stepped cost, right? And variable cost, we know that variable cost per unit won't change. It will remain the same. So now I'm going to wrap it up because I have to move forward to the next part of the question. So let's go for it. See, so additional information, the director has sent a target profit of 1,50,000 per month. So the target profit is 1,50,000 per month, means that we want to achieve a target profit of 1,50,000. Calculate the number of units to be sold in order to achieve the target profit. 2 marks are there. So if you have been given the formula to calculate target units sold to achieve the target profit, the formula is going to be total fixed cost, because fixed cost we have to cover, plus target profit. Now with this fixed cost, we have to achieve the target profit also. Along with the target profit, we have to cover the total fixed cost and divided by contribution per unit, that will remain the same. So total fixed cost is going to be 1,20,000. Target profit, we have seen that it is 1,50,000 divided by contribution per unit, which is 20. So the answer is going to be 13,500 units. So if we want to achieve a target profit of 1,50,000, which is given right now, let's see, this is 1,50,000 we want to achieve, then we have to sell at least 13,500 units so that we will achieve a target profit of 1,50,000 and we will be able to cover the fixed cost also of 1,20,000. Or you may say that contribution will cover 1,20,000 of fixed cost along with the target profit of 1,50,000. It will give us 1,50,000 target profit along with the total coverage of fixed cost. 13,500 units. You know that at 4,920 units, we'll be having a loss. At 6,000 units, the break-even point, yani it is no profit, no loss situation. It means that we have a zero profit. And above that, above 6,000 units, if we are selling above 6,000 units, we are getting into profit. At 13,500 units, we are achieving a profit of 1,50,000. And at 15,000 units, we may achieve more profit, which is a budgeted capacity of our company. Additional information, let's move forward. At another factory of D Limited, a single different type of product is made. The following budgeted details are available for 1 month. 1 month's production, direct material, direct labor, other variable cost, and contribution of 24 is also given. Normal capacity of this factory is 18,000 units per month. Recently, the factory has been operating at 80% capacity, and this has resulted in a monthly profit of 1,50,600. So it means that profit has been given, and it has been also said that the normal capacity is 18,000 units per month. And recently, the factory has been operating at 80% capacity. Means that if the normal capacity is 18,000 units, we are basically currently selling units which are 80% of the factory capacity, normal capacity. 18,000 into 80%, we will get 14,400 units. And the profit is given 1,50,600. You can easily understand that if you have profit with you, then, and contribution is also given, if you add contribution plus all variable cost, you will get the selling price. Sir, I didn't understand. Let's do it. Let's do some part of this so that you can understand. I'll write, this is for it. I'll write over here. See, sorry, contribution is equal to selling price minus variable cost, right? So selling price will be equal to contribution when it will move toward the left side, contribution plus variable cost. Got it? So selling price is equal to contribution plus variable cost. So let's calculate it. Contribution is going to be, that is given 24 plus variable cost is direct material is 16, direct labor is 17, and other variable cost, which is still a variable cost, right? That is going to be 3. So when we add contribution and all variable cost, we are going to have selling price, which is 24 plus 16 plus 17 plus 3, it will be 60. So 60 is going to be our selling price. Now we can find that 60 is the selling price. Variable cost is the total of this, whatever be, and the contribution per unit is 24. This is we are talking about per unit. Always remember that per unit selling price, variable cost per unit, contribution per unit will not change with the change in the volume of production, right? It will remain the same. So let's move ahead of this particular part. So CD we have done, but this additional information we need that. That's why I have gone for this calculation over here, because it includes contribution also. Remember that it is 24. Direct material is 16. Remember that. Direct labor is 17. Remember that. And 3 is other variable costs. If you want to take a pic of this, you can, because I have to go for the, I have to look for the next page also, that what is the requirement of the question. And 60 is the selling price. So let's move forward. 60 is going to be the selling price. We are done with that. Now let's see. So what's the question demands from us? The director has been informed that a major competitor manufacturing the same product plans to stop production. The director plans to take advantage of the situation and are considering 2 options. So I think this is going to be the, we have solved that particular part, and maybe this is going to be the last one. Maybe we have solved this. CD, okay, E part is the same. So we are going in the right direction. So let's so director so the director have informed that a major competitor manufacturing the same product plans to stop production, and the director plans to take advantage of the situation and are considering 2 options, right? Any major competitor has stopped production. When the major competitor has stopped production, it means that we can sell more units because the competitor has stopped production. So what options we have? Option A, now you have to find the monthly profit to be made from option A. Then you have to find the monthly profit you are getting from option B. You can prepare the marginal cost statement. You can also prepare by calculation also. So increase the monthly production by 6,000 units on current output level. Current output level is not 18,000 units. Remember that. Current output level is 14,400 units. How come, sir? Let's go for it again so that you can find it easily. That what I'm trying to make you understand. So just a minute. It's creating little issues. Yes. So if you just see that normal capacity of the factory is 18,000 units, right? The normal capacity is 18,000 units per month. Recently, the factory has been operated at 80% of the capacity. So let's find the capacity also. That current capacity is how much? That is 18,000 multiplied by 80%. I've already calculated it. That becomes 14,400 units. So currently you are producing 14,400 units rather than 18,000 units, because capacity is 18,000 units. No doubt you can, you can produce 18,000 units, even more than the capacity if you have excess resources. But currently you are operating at 80% of the capacity, which is 14,400. Then the profit is also already given in the question, that is 1,50,600. So now let's move back. We can find the fixed cost easily from this calculation. How come, sir? Let's see. We know that contribution less fixed cost is equal to profit, right? Like profit plus fixed cost equal to contribution. So total contribution is going to be how much? Our contribution is 24, and the production we are giving is 14,400. So let's go for the calculation. 14,400 multiplied by contribution per unit 345,600. So this is going to be the contribution at current level of production, which is 80% of 18,000. That is 14,400 units multiplied by 24. We will get 345,600. So the question is basically saying that the profit, monthly profit is, if you just see, the monthly profit is 150,600. Here it is written 150,600. I'll write over here. You can find it easily. You can 150,600. So if the monthly profit is 150,600, you can easily calculate the fixed cost. That's not a big deal because the difference between the contribution minus profit is the fixed cost. So contribution minus fixed cost is going to be the profit, or you may say the gap of the two is going to be the fixed cost. Sorry, profit is going to be the fixed cost. So 345,600 minus 150,600, 195,000 is going to be your fixed cost. So we have found the fixed cost also as per this question. This calculation of fixed cost is somehow or the other is little difficult, but not that much because all the data is available. So if total profit is given, you can easily find contribution per unit is also given 24 multiplied by 14,400. So the gap between contribution less fixed cost is profit. So you can take the difference of the two amounts. You can get the fixed cost easily, or the total fixed cost, which is 195,000, right? So this is how we have solved it. Now let's move to the next part of the question, which is the most important and most difficult part. And for that, we are basically doing all the stuff. So competitor has stopped working, and option A basically says that you have to find the profit, monthly profit, which is supposed to be made as per using option A, increase monthly production by 6,000 units. So let's move towards the part over here, right? So how we are going to find the profit. I'll do it over here. Let me see. Let me take it back here. Okay. So increase the production by how much? Let's increase monthly production by 6,000 units on current output level. On budgeted output level, it's not saying, it's saying that current output level, right? So the current output level is 14,400. So now the production or the unit sold is going to be 14,400 plus 6,000, and that is going to be 20,400. So 20,400 is going to be the unit sold for now. For this particular option A, that's talking about. Sell all the production at a price per unit of 2% above the current price. So we already knew that the current price is 60. So the new selling price is going to be 60 multiplied by 2%. That is going to be 1.2. So we will add 60 into 1.2. We will get the new selling price is 61.2. 61.2 is going to be the new selling price according to the cost volume profit analysis. And this question demands us to get that. Any production above normal factory capacity will require direct labor to be paid an overtime premium of 50%. So you will remember that what is going to be the direct labor rate. So direct labor rate is going to be how much? It is 17. So the examiner is basically asking that all the production above normal factory capacity, and normal factory capacity is how much? That is 15,000 units. Normal budgeted capacity is 15,000 units. If I'm not wrong, I think 18,000 units is the normal budgeted capacity. 18,000 units is the normal. Wow, different. That was a different part. We can check it also again. So 18,000 unit is going to be the normal capacity. So we can say that now we are basically selling how many units? 20,400. So it means that, let me write it down, that normal capacity is 18,000 units, right? Because we were basically selling 80% of the normal capacity, and that was the current level. But normal capacity is 18,000 units, and above this capacity, we have to pay more overtime. So overtime units for which we have to pay more, they are total units which are supposed to be sold at 20,400 minus 18,000. So 2,400 units are those units on which we have to pay overtime. So let's go for the calculation. And first we will find the revenue because we have to calculate the profit. That's why. So revenue is 20,400 multiplied by 61.2. So I will multiply 20,400 with 61.2. Let me have a dollar sign here. So I can, why I'm not preparing the full-fledged statement or not writing it down, because he demands us only for the working. Working is enough because he didn't ask us to prepare a proper set of marginal costing statement. So if you are preparing it, you can do that. If you are not preparing it, that doesn't make any difference. So 20,400 multiplied by 61.2, you will get 1248480. Let me write over here 1248480 less variable cost, right? Spelling mistake, I can understand. I've already told it to you, doesn't matter because I used to type the things. Less variable cost. First of all, variable cost, we will get direct material. Then there is direct labor. Then other variable cost, right? So direct material is going to be 16. So I will multiply 16 multiply by 20,400. How much I'm going to get? Let me calculate it. Yes, 326,400, right? Then direct labor is going to be how much? We have to do it in a different manner because direct labor will be in two different variations, because direct labor, one is the normal direct labor and the other one is going to be the overtime. So let me write the both things. So 18,000, on 18,000, we are supposed to pay the normal direct labor, which is going to be the 17, because 17 is the direct labor. Here it is written direct material 16 and direct labor is 17. So the amount is going to be, let me calculate it, that is going to be 306,000. Overtime, that is for 2,400 units. Why, sir? Because, my dear, we have been selling 20,400 units and above the normal capacity, which is 18,000, all the units which has been sold, we have to pay overtime to the workers. So 2,400 units, we have to pay overtime, which is 50% more than the normal pay rate. 50% more is 17,000 divided by 2 is going to be 18.5. And if you add 8.5 into 17, you will get 25.5. So you will multiply it 2,400 with 25.5 to get the answer, which is 61,200. Then we are going to write the other variable cost. And that is going to be 20,400 multiplied by 3. So let me calculate it. That is going to be 61,200. So both are the same. It doesn't matter if they are coming same. 61,200, right? So less revenue minus less variable cost, that is direct material, is 20,400 into 16. Then direct labor is 18,000 into 7. That is the normal direct labor. And then overtime, which premium 50% more than we have to pay, that is 17 plus overtime units 2,400, and overtime pay rate is 17 plus 8.5, half of 17, that is 25. Multiply by 2,400, 61,200. Other variable cost is 20,400 multiplied by 3. So let me calculate the total of the all variable cost. Let me do that for myself. 326,400 plus 306,000 plus 61,200 plus 61,200. So 754800. I'll write over here 754800. Now I have to subtract 1248480 minus 754800. 12484880. So the answer is 493680. So answer is going to be 493680. What is this? That is contribution. Now what I'm going to do, I will subtract fixed cost from this to find the profit basically. Now I'm going to tell you a very important thing which is in your mind also and which is very important to discuss here, that fixed cost in total will not change. Although the fixed cost which we have calculated over here, let me see, make it out over here, that is at a current production capacity of 14,400 units, where the normal capacity was 18,000. But even at 18,000 units or 14,400 units or at a capacity of 20,400, fixed cost will not change. It will remain 195,000 because even the production has increased or decreased, fixed cost will not change with the change in the level of output unless it is given in the question. So we will find the profit. So the profit we can calculate plus 195,000, 298,680. 298,680. This is going to be the profit for the year. For the month, sorry, because it's a monthly profit statement. Now let's move forward. And now this is the option 1 only. Now let's move toward the option 2. In option B, the question is basically saying that you have to just a minute. Yes, option B is basically saying that increase the factory capacity is not basically coming. Yes, increase factory capacity to 22,000 units. Sell all production at a price per unit 3% above the current price. So the capacity is going to be, units sold is going to be now 22,000 units. So it will increase more. And the selling price is 60 into 3%. That is 1.8. We will add 1.8 in 60. So we will get 61.8. So it means that selling price has increased to 61.8 now. So in option 2, we are selling units of 22,000 units we are selling, and the selling price is going to be 61.8, right? So let's see how other changes have come in the question. Suppliers of direct material will be expected to offer a trade discount of 25% instead of the current trade discount of 20%. We'll discuss it later on. Direct labor rate will per unit will be increased to 18.5. So it was 17. Now it is going to be 18.5. Let me write over here. Direct material, बाद में discuss करते हैं. I will discuss. Direct labor is going to be 18.5 rather than 17 or 25.5. Forget about option 1 over here. Some additional machinery will be purchased at a cost of 1,20,000. Machinery is depreciated by 20% per annum using the straight line method. So this is going to be the additional fixed cost of depreciation. And how we are going to calculate it? Let me see that additional machinery 1,20,000. Depreciation is 20% per annum. But we are going for the calculation of monthly calculation. So 1 by 12. Then we are able to find the depreciation on that particular amount. And the depreciation is going to be 2,000, right? Next is, in addition, 20,000 per month will be spent on advertising. So fixed cost will increase because of advertising with an amount of 20,000. That will be a part of fixed cost. So fixed cost will increase by 20,000 and 2,000. So it will increase by 22,000 all over, right? Then let's talk about the important point, that is direct material. This has come in the papers in the past also. It doesn't mean that it has come for the first time. It has been coming even in February, March 23, 22. We have seen this type of question coming in the exams, in which the supplier of direct material will be expected to offer a trade discount of 25% instead of current trade discount of 20%. The supplier of direct material will be expected to offer a trade discount of 25% instead of current trade discount of 20%. We were getting a trade discount of 20%, but now it has increased to 25%. Number 1 is this, that the trade discount of 20% is basically given on a price of 16 because the price of direct material is 16. It is written over here also 16. But the price of 16 is basically after a discount of 20%. So it means that 16, which is the selling price, is equal to, I will write over here, 16 is equal to 80% because after the discount of material price, it is 80% of direct material price. So the price of direct material, 16 divided by 0.8, that is going to be 20. So the direct material price was 20. Then we have been given a discount of 20%. If you calculate 20% of 20, you will get 4. And 20 minus 4, you will get 16. So this is how we got 16 earlier. But now this discount has been increased to 25%. So 20 multiplied by 25%, it will come 5. So now the direct material price is going to be 20 minus 5, that is going to be 15 rather than 16. But you have to gross up the amount first because 16 is not the actual price. Actual price of the material was 20. We got a discount of 20%. This is 4. We subtracted, then we got 16. But now that discount has been increased to 25%. We will calculate 25% of 20, not of 16. We will get 5. 20 minus 5. So 15 is going to be the amount of the direct material. So fixed cost is 195,000. I am rubbing it up because we have already have the normal fixed cost is already with us. So let's calculate, start from the revenue. So revenue is going to be, let me do it for you. So revenue is going to be 22,000 multiplied by 61.8 because the units have already been increased and the selling price has also been increased according to the scenario. So let me calculate the revenue for you. That is 1359600. 1359600, right? The sales is going to be 1359600. Now I have to find the variable cost. So variable cost we include direct material, then direct labor. There is no overtime. Then we have other variable cost. Let's see. Direct material, the price is 15. I will multiply 22,000, which is the unit sold, with 15 to get the amount of direct material. So that is going to be 330,000. Then direct labor, that is 22,000 multiplied by 18.5 because direct labor has increased to 18.5. It is given in the question that it has been increased to 18.5 from 17. Option 1 we don't need to take into account. That is going to be, let me calculate it, 22,000 into 18.5. That is 407,000. Then other variable cost, that is 22,000 multiplied by 3 because it has not changed. And nothing has been mentioned over here. It means that the other variable cost has not changed. It has remained the same. So I will go for the total of this. That is going to be 330,000 plus 407,000 plus 66,000. We will get 803,000. Right over here, 803,000. And then we can find the contribution. The contribution is going to be 1359600, 556600. So the contribution will be 556600. 556600 is going to be the contribution. Now I will subtract less fixed cost. And remember that fixed cost has increased. Yes, because fixed cost, this is one is the normal fixed cost, which is given in the question. That is going to be 195,000. Then depreciation, that is also a fixed cost, which has been calculated, 2,000, 1 month depreciation. And then advertising has also been increased as a fixed cost, which is 20,000. So I will go for the total of the fixed cost, and then I will subtract the total. I will get the profit. So this is going to be the total fixed cost is going to be the 2,17,000. Oh, sorry. And then I will subtract 7736 556600. Just a minute. 556600 minus 217,000. I'll get 339,600. So the profit is going to be 339,600 is going to be our profit for the year, profit for the month, sorry, or from option 2. So we have calculated both profits either from option 1 and from option 2, and we have gone for a complete solution for option 1 and for option 2. And I hope so that you have understood this question, though it was not that easy. Obviously, remember that marginal costing is always difficult for everyone. And unfortunately, this is a topic which has not been taught properly, although it should take at least 1.5 months to cover all the topics of marginal costing. But as I already told you before my guess of May June 2024, that things have not gone right for this subject, unfortunately. That is why the P3 questions which has come in the paper, even I have given them in the guess, like amalgamation, merger, IES, NPO, but still the grade threshold will be on the lower side. That will be again 42 or 43 will be the grade threshold for P3. And for AS, if you talk about for paper 2, which is right in front of you, the grade threshold will be of 58 or 59, right? Out of 95. Okay, let's move forward. Any problem over here? I hope so that you can ask me on my WhatsApp number. So the profit from option B is more than the profit from option A. So apparently it looks that option B is better than option A. But having said this, you can see that the selling price has increased in option A or option 1 by 2%. So maybe it will reduce the sale in the future. But already the sales volume has increased to 20,400. So sales volume has increased even with the increase in selling price. It may be because the quality is not, there is no hindrance in the quality, and direct material price has remained unchanged, right? We have still achieved a good profit, still achieving a healthy amount of profit. And direct labor, we have to pay overtime because we have increased the production. So maybe employees will be demotivated. And because of their demotivation in the future, the quality of the product will hamper, the quality will deteriorate. And because of that, the sales volume can decrease in the future, right? Fixed cost is already the same, that is 195,000. So that won't give us any problem. Secondly, in option 2, we are having more profit. The selling price has been increased, but the sales volume has also increased. We are paying more to the direct labor, right? Already we have increased the amount of direct labor. But even with this, because of the advertising, maybe we are able to sell 22,000 units, which is basically helping us. That even with the increase in selling price, we are able to sell 22,000 units. So advertising, which is a very big amount of 20,000, but it is playing a good role, right? And because of the machine, maybe we are producing more number of units more efficiently, more quickly, with the better quality. So quality has also improved. So that's why you can see in option A, you can write that we have a larger share. You can write over here, larger share and increased production. We have increased production from the larger share, right? Then the second thing is this, that because selling price has increased, so it means that sales may decrease because the workers are working overtime. So workers may be demotivated. Workers may feel demotivated in future. though they are getting higher amount of price, the higher amount of labor, but still maybe because of overtime and what happen, quality can decrease. That quality can be affected. That would be a more appropriate word. Because of the workers may feel demotivated in future, and because of that, quality can be affected. Why I am solving this in front of you? Because the last part has basically is asking us to go that advise the company, which is the company, option A, option B, maybe it is written number. Yes. The director has been found a major competitor manufacturing the same product plans to stop production. The director plan to take advantage of the situation and are considering two options. So because of the competitor, you are able to sell more units. So because of the competitor, you are able to sell more units because it is given already. But we have to see the reaction of competitor also. That maybe the demand has been decreased. So maybe there is no such demand of the product now, right? So we have on option 2, we have increased the selling price, and we are finding it that we are able to sell 22,000 units, but because the competitor has stopped production, maybe the competitor has reacting because of the reason that the overall demand of the customers are decreasing for that product. So that will not increase our sales in any ways. That will not increase our sales in any ways, right? So next we will see that larger shares and workers may feel demotivated because of the demotivation is there because of the increased workload. Although they are getting more, and the quality may decrease because of the same reason. In option B, if we talk about, we are selling more units. 1,600 more units have been sold out. Profit is also increased by how much? Let me calculate. 339,600 minus 298,680. That is 40920. So profit has increased in option B by just a minute, 40920. So profit has been increased by 40920, which is basically helping us to cover the fixed cost after covering the fixed cost of 20,000 of advertisement. So that is also very nice. Secondly, we are also getting trade discount in option 2 more than what we were having in other. So that discount of $1 is also paying us, is also giving us discount because the large amount of goods has been purchased from the supplier. So that's why we are getting. So maybe in the long run, we are able to sell more units, and maybe we'll get more discount, more trade discount will be given because the trade discount has already been increased from from 20% to 25%, right? So secondly, I told you that the machinery may improve quality, right? And efficiently, more efficiency will create. Then advertisement, because of advertisement, we are able to sell more units. So that will increase the sales units in the long run. So I believe that I will go for the option 2 because we are producing better quality and a better product with more efficient machinery, and more profit will be there. So he is basically asking us to find to compare the both options and tell which option you are going to choose by taking both non-financial and financial factors. You can write also that the direction of the suppliers will also be taken into account, that either suppliers are available to give you to supply that more number of material. Are they willing to supply more amount of material available from suppliers because we are increasing the production? Then you have to see that employees, I've already discussed that they may feel demotivated because their workload will increase and they have to work overtime. But in option 2, we are not going for any kind of overtime. Then the direction of competitor already done that they have lost. So you have to see that if competitor is not going to produce that product, why is it so? maybe the demand in the future is going to decrease. Maybe the people are not willing to take up that product. But as we are, maybe we are hiring new machinery that will be more efficient, and the customer will like that product, which is more efficient, and because of the better quality product is possible. So supplier selection, then either the customer availability is there, as I told you, that customer are willing to purchase the units. Then direction of supplier, direction of competitor, I have already discussed, and employees. So this is how we have completed this question. And I hope so that if there is any query, you can ask me anytime on my WhatsApp number 0333471287. And inshallah, I'm going to come with some new papers. I have papers with me, and inshallah, I'm going to solve these papers hopefully before the exam result. Right. Next, I will be solving the paper 3, variant 3.2, inshallah ta'ala, in the future. Thank you very much. And you are free to ask any question. Have fun.